is moving again, dude.
Is
Just
it?
broke its high of 619. Yep.
All right, we're going live. Let me get my screen up in the
Ahoo!
Discord channel
We're
too.
going live, everybody. I got up early and drank a lot of coffee. Yeah.
You're well animated today, sir.
I am.
Right on.
Let's.
I'm getting there. I had my neighbor was having some car trouble, so you know,
Oh,
my
like a good
background, I
neighbor.
had to go help him. And long
Oh,
story
how
short, he needs a
sweet.
new battery, and it's not on a model that makes it easy to change a battery. So I'll have to help him out later when he goes and gets a battery.
Let's see.
He's got
I'm
two
gonna see
cars. You
how
can
big it
use the
is.
other one.
Whew, that's 464 megabytes. Awesome.
All right. So Ford's kind of actually getting back into a range where we can start messing with it, but
Ooh, market watch. We
it's
got stuff today.
bit on the flat side for strangles, so it would be more of a day trading directional type of thing right now. We've got Q kind of setting up for a little bit of a pullback. We had that gap up in the pre-market, pulling back down to support now around yesterday's close, actually. Let's go with a 5-minute chart on that.
It's gonna be a weird day.
I should mark yesterday's close. That would be ideal.
Yeah.
262.75. Put a big old orange.
You see, we got that FOMC minutes at 2 p.m., huh?
Yeah.
Not only that, we have a 10-year note auction at 1 p.m. And I think that could be volatile. And then we've got Atlanta Fed business inflation expectations at 10 a.m. Whatever happened at 8:30 a.m., I can see the candles on the MES. And I'm like, ooh, what happened there?
Yeah, it kind of moved up like it was going to be a green day, and then now we're opening around yesterday's close.
Yeah, what's it gonna do? It's gonna flirt with that low again. You know, it flirted with that low for a while, and then it went below it. Remember?
Yeah, it did.
A few weeks ago.
Let me get this pivot set up so I can mark yesterday's close, which should be automatic, but not in the land of Weeble here.
In the land of Weeble. Bum.
Automated to set up, a nice little pivot point from yesterday's close.
This is what caffeine does to me.
It's not a bad thing. That's close enough. I can be within a penny. I'll live with it. All right.
It'll make me crash later on.
I always like to adjust that pivot to reflect yesterday's close because I like to know where I'm messing here. Oh boy.
Yeah, absolutely. That's the thing. One of the things I learned from Sig.
357.
When he does the ES, you get the open, the close, the high, and the low of the previous day, and you mark them.
Yep. I just go with the close.
Sometimes you just go with the close. Sometimes the close is so close to another line, I just don't even fool with it.
Yeah, that's true too. All right, I got that one. SPY. Cool.
Yeah. Beautiful.
But I have previous pivots, and I don't have a lot on the Qs lately because I try to keep that chart kind of clean. I'll let SPY be my dirty chart. They kind of coincide with each other pretty well anyway, so you kind of get the mixture of two time frames. But I'll trade whichever one is setting up the nicest, and sometimes you'll know that they don't always look exactly identical on a 1 and 5 minute chart. In fact, lately QQQ has been a little more smooth, so it's been easier to trade on. And yesterday those condors worked out beautifully. I was able to put debit spreads right on the opening on that nice downward trend. I let them walk up, and then I bought some call debit spreads on the other side of that and let that run up. Made 120% return on those. Now, both sets of spreads I paid the same for. So when I'm 120% profit on one leg, I can close that, and then I retain a 20% overall profit on the position. So I have a free put position at that point. And then yesterday I was able to close down most of that. I left a few of them hanging on overnight. In that return to just below the open low, and was able to capture quite a bit more profit on that one. So math will add up later, but it was nice. And then today I've got a free
Ooh.
position. So if this goes and melts down even further, it gets closer to my strike price because I'm out of the money. I'm at 250, 252. I ran $2 wide, and if it runs down towards my strike a little bit more, those will be profitable even more than yesterday. So plus the opening range will tend to have a higher implied volatility, and that'll add to it as well. So got about 5.5 minutes to market time, and we've got a little bit of time to look around. I was going to look at Google because we opened up a put debit spread on Google yesterday.
I was looking at those that article you sent me or you put up yesterday, and
The debit spreads.
Yeah, and I was my chops were it made me salivate. I was sitting there going, oh, really? Huh.
And that's
I'm like, I'm going to put a couple more dollars in that account I got.
There you go.
before we start. But I mean, I was like amazed at what you could do.
Yeah, it's the power of leverage, and like I said, it just reduces your risk so much. It's like, why the hell not?
And I don't care that it caps my profit. I'm happy. I'm fine with that because it reduces your risk so much. And then I guess like if you're just doing one, and you're probably when you say you're trading like contracts of those, aren't you?
Yeah,
I mean, like you're not just trading one.
No, I'm doing a few
You're doing
more than
like
one.
3. Yeah, you're probably doing 10 to 20 or something.
Depending on what it is. So if it's a day trade, I'll go as high as 10 or 20 of them. Sometimes a little more. If I'm very, very confident in a move, I'll do up to like 40 of those. And they're out of the money at a point where it's so cheap. I'm getting in for less than 10 cents or less on a dollar wide typically. And yesterday I was able to get in a $2 wide at 8 cents. And it's insignificant. People will be like, why the hell would you bother trading that? There's no chance in hell it's going to expire in money. I don't care. I just want the price movement. So, when at 8 cents per contract, I'm open to 40 or 50 of those, day trading them. And then I was able to maintain a free position overnight. Why the hell not?
And you're not worried about whether they expire. You just, if they make a move and you get profit, you take it and you go.
Absolutely. So I don't. It's just like day trading a penny stock. You're using a similar amount of leverage, and you're getting or similar amount of risk, but you're gaining, leverage of options trading. And even though your gains are capped, you get within like $5 of a dollar wide that you bought at 10 cents on the spread. That thing will go up to like 20 or 30 cents per spread, and you've made 200% profit in that. Just close it. I don't have to hold it open for any longer than I need to. Hell, sometimes if I see like 20% profit, I'll just take it. It's right there. Why not? So the whole thing is to be able to detach from that and not sit there and be like, oh man, this thing could be in the money. I could be making a killing on it, dude. If you get a profit at all, take it. And if it runs away from you afterwards, don't FOMO over that. Move on to the next thing. It really is that simple. All right, nice evening star right before the bell. I'm loving this.
Oh, I'll leave my questions to after.
Oh, you good? Ask away.
No, it's all right. I want to watch it when it opens, so I'll.
We got a few minutes.
Watching bit. Yeah, we got a couple 3 minutes.
No, I was just going to say I've worked out how to set up brackets on Tastyworks, and it's commission free as well.
Sweet.
But what I now need to learn, obviously, is the entry and exit points. So what I'll do is something I can do on penny stocks when the market's a bit calmer and where we've all got time later, and you could just show me how to set one up.
Sure. And the thing, one other thing on penny stocks is it's just like a lot of the rest of the market, especially penny stocks. I wait 15 minutes at least before I even start to do any trading, because those first 15 minutes are extremely volatile in penny stocks. And even if it's at a stop loss, it can be so volatile, it can blow through your stop loss and make it like a market order. So if you get a 10-cent stop loss, it'll blow it down to where it's $1 loss per share. And so that's why you don't trade the opening of the market in penny stocks.
Okay, like I say, I'm going to do today is learn how to set the trade up. I don't really care if I lose money, but yeah, I'm going
Part
to
of
be
learning.
relying on price action, but I just
You
want to
got it.
learn how to set the trade up so that I can understand what I'm looking for, because it's going to be bearish, isn't it? We're not going to be doing any buying any calls or put. Well, we're not going to be buying any puts or anything, so we're just literally buying stock. So we're looking for bearish price action. So I just kind of need you to guide me in the right direction and help me set it up, and then I won't bother you again. I can get on with it then.
No, that's fine. I don't mind you bothering. And we're looking for bearish moves, but penny stocks move different than the rest of the market.
Right.
So we're looking for bearish moves to set up for the bull move. And,
Yeah, so we're
right.
looking to get in at the bottom really, and then follow the bull move up. So we're only trading in one direction at the moment. I get that.
Right. But we may get flags, and then we get in on a flag too. So it's just we'll get all those questions answered later, because I'm sure I'll over answer them.
Yeah. Okay. Cheers.
All right. Getting ready to crack that bell. Oops, let me get my futures chart up top.
Yeah, I should get my Webull open.
There we go. That gives me my second timer too. So now we've got 15 seconds to the bell here. I just use the one that's on Tradeovate because it's always above your futures contracts.
Right, I like that one.
I would just click on my computer clock and use that, but that's one more window I don't need open. All right, what's it going to be? Sudden volume right on the bell. Typical. Nice bar. Set it. Break that 260, 275 so we can get our bear on. There we go. SPY touching yesterday's close. And Bitcoin futures kind of looking. I got to extend my trend lines. That's what I got to do. Notice how it respected that right there on that angular resistance.
Respect my authority. Uh-oh, there it goes.
Timber. Let the market fall.
It's a 0 day too.
Yes, it is. Sweet. About ready to capitalize on that spread too. In case you guys don't know, just so you do know, when I'm trading spreads, the other important factor is I'm trading them on zero commissions. So I'm not paying commissions on those contracts. And I know that Robinhood gets a bad rap from a lot of people, and a lot of those Reddit people who followed that certain group hate it. I don't care because it's useful. It's commission free, and I can trade spreads on it all I want. It's very fluid. It's never given me a problem with that. Plus, I can be an option seller on it. And like I said, no commissions, option selling, no brainer. Running that wheel trade strategy, stuff like that, where you're just selling options or running spreads. You are an option seller when you're trading spreads because you buy one and sell one. Essentially, when there's no commissions involved, you can really take advantage of some serious moves without having to worry about it. As far as percentage goes, that's why I can trade so far out of the money too. So I can go, down like $10 out of the money on this spread and not give a damn if it's going to cost me commissions to get out of it and cost more than I'm making in profit. So it's kind of a catch-22. So when I'm calling out some of these spreads that I'm day trading, it's mainly just that I'm scalping those with commission-free trading. As far as the swing trade setups that I trade, where I'm like yesterday, we got that alert out on the Google out of the money spread that expires in November 18th. That's a swing trade, so it shouldn't really matter if there's commissions on that or not. You can still get some pretty hefty percentage gains on that movement, and that's moving with us this morning as well. So good stuff. Let me pop open my spread on Google so I can see where I'm at. And I just traded the ticker GOOG, so just the simple Class C stuff. Got plenty of liquidity. I don't need to be in the A-class stuff. And let's see here.
9:33. Could be a bloody day.
I think so. At least until we get to that new low.
All right.
We set a new 52-week low yesterday, so
we have a lot going on. We have a 12. Right now, the ECB President Lagarde speaks, and they've got three. That looks like that could be a turbulent event. At noon, we have IEA short-term energy outlook, and they've got that as a volatile event.
Nice. We're just about down to yesterday's low. What we get? 355.71 or 355.71 was yesterday's low. And there's a doji. We might have a little bit of a pause candle here. Watch for a push back up to like 262.65 on Q. There it is. Maybe a little higher, back to the close. Hopefully it just gives us a nice wick and continuation.
Good morning, guys.
Morning.
Morning.
Everything's got a nice bear flag on the open here. It's cool. Why are we happy about bear flags? Well, because we're trading bearish.
Have to break that low.
And this is for you YouTubers out there. This is what we do. We teach people how to trade in any market conditions. You don't have to care if it's bullish or bearish. You just have to care that it moves. You can trade sideways too. There's strategies for that. That's particularly what the wheel trade strategy is for. Also some strangles you can do sideways. But particularly when we're trading directionally, we just need movement. Doesn't matter if it's bullish or bearish. We can trade in any conditions. The only thing that's not fun to trade is insolvency. If there's no volume, then, well, no trade. All right, so it looks like I'll keep my Google spread open a little longer.
Bear at bullish engulfing right now on that 5-minute, but it ain't finished yet.
I see that.
Got a morning star on Ford. Well, that's already happened.
Yeah, Morningstar just printed. And we got one in Bitcoin futures and everything to boot here. And we were looking at American Airlines, and they got some movement. Yesterday it was quite volatile. I think we'll get a retest of resistance on American Airlines, and we might be able to do some put day trading on that today. Probably look for rejection right around 1248 to 1250 for American Airlines there. Well, we cracked through yesterday's close. Let's see where we go. I like trading opening range sometimes, but other times it's kind of...
Quick question, guys. You know you were talking about micro futures.
Mm-hmm.
Is that what you were saying? I should look for an account that allows me to trade micro futures, yeah?
I mean, pretty much any futures account should allow you to trade those.
Yeah, okay.
Simply
All right,
just a
sorry.
ticker change, really.
So, what was it micro options that you were suggesting?
So I was looking at the nano futures on Bitcoin to practice trading price action, just because they're super inexpensive. If you have low enough commissions, like round trip on Tradeovate's like 21 cents per contract on the Bitcoin nanos, and you could probably throw like $100 in that account, and then just you wouldn't have to worry about too much drawdown, because those things move with such low leverage. It just gives you like very little loss, especially if you cut your loss quickly. I mean, you might lose $1.50 if you let it run away from you. So
Yeah. I'm assuming nano futures are even smaller than micro futures, and that's just the only difference, yeah?
right, yeah, micros and nanos are different products.
Yeah, I wouldn't trade on micros. I'd be careful with those because
Yeah.
futures can rip your face off
Oh yeah,
until you get more comfortable with price action, and then I would paper trade those or do the nanos like Jeremy's talking about because you can blow up on a futures account real quick.
oh man,
Okay.
yeah, it don't take long.
Sorry, I did write this down. I don't know where I've put it. What was a nano's ticker symbol again?
So
Just give me an
yeah,
example.
for the one for Bitcoin, it's BIT, and then you'll have different subcodes for like the month and expiration date. Like currently, it's BIT V2, and eventually that one, probably in the next couple of days here, will be close enough to expiration where most people will start rolling to the next expiration. So. All right, are we going to be able to go short yet today? Let's see. Coming up to that key pivot again, aren't we? That 359 on SPY. Wow, there goes American Airlines. Nice.
Morning, Jeremy.
Morning.
Hey, I closed that Google, but at half the profit because I couldn't figure out where the heck the open order was.
Oh, but it did make
All
profit.
right.
I could have gotten about $16, but I got about 8.
Oh, you were on one side. That's right. You couldn't cap it with a spread.
Yeah, so I would have gotten out better, but at least I still got out.
Yeah, you still got out. You still got some profit. I'm just waiting for the rejection. I might just see if I can add to that position. Because overall, if you look at the daily chart, it's still in a descending channel. There is a chance it can break out of it. It can be a double bottom here, but you look at the market overall, and well, let me do that with Q. It'd probably be better. We're still in bear mode, and we're kind of teetering on a brink here, so to speak. We made a new 52-week low yesterday. Q went down to 261.03 for a new 52-week low yesterday, and we might get a little bit of a relief rally, but I don't think it's going to be as strong as we've had before. We might see 267 if it pokes that high, but the likelihood of this becoming a double bottom and a reversal to kind of reverse the bear market here is very slim. We got a few talking heads out there saying, "Oh, this is the bottom. Buy this dip." And then I look at the liquidity in the market and I'm like, So a lot of retail traders have fallen off. The whole COVID bump is over. You've got institutions that are still trying to unwind some long positions in this market, and that's what these relief rallies are. It's a sucker's bet. A bunch of people get roped into buying the dip, and then the institutions sell it to them. So when you see these little relief rallies, look at the volume in them, and it'll be a good clue. Let me zoom out a little bit. You'll see that most of the volume on little upticks ends up being red overall. And when you see that, man, you just kind of realize what's happening. And you look and compare the news stories, and you see like the flapping heads, I call them. They start to say things like, "Oh yeah, this is great. This market's going to turn around and rip a face off. Yeah, it's awesome. Buy, buy, buy." Yeah, no, you can't convince me. Sorry, guys. I will trade whatever the chart tells me to trade. Period. But when I see there's liquidity falling off in the bearish moves, and then suddenly you see a talking head come out and say, "Hey, buy this," that's exactly what it is. They're just generating liquidity. Come on, guys, we're not stupid. Well, we're not going to fall for it.
We're not gonna take it.
That's right.
I'm thinking about
No.
putting a put on American Airlines if it starts to turn down.
Let me get back into that one. I mean, we're leading up to the holiday season where we'll have a lot more traffic, but I mean, they're still having problems filling pilot seats, so that's rough. overall, still bearish. We're kind of setting up a measured move on that one too. So we could go into this bear flag on the daily chart breaking over, and we could see like $10 a share on that thing before long here.
Right.
Oh man. I mean, I guess they're hopeful for Thanksgiving, but I know a lot of people in the aviation industry, and they are not seeing any turnaround anytime soon. They're just seeing an increase in traffic, but like I said, I mean, they're going to have so many problems with canceled flights and delayed flights, and just it's going to be miserable for traveling this year, unfortunately. All right. There we go. We can start shorting some stuff in a few minutes here, I think. Give us a couple of couple dojis or a spinner or an evening star here. We'll have a good time. But yeah, the article I shared yesterday, it kind of gives you a pretty good description of what debit spreads are and how to trade them. And
So how are you playing that Google's debit spread you put on yesterday in the alert channel?
so I'll probably watch that for at least the rest of the week here, because we've got kind of speculation that the Fed is going to start easing some of their interest rate hikes in order to avoid a market crisis, so to speak. But just looking at the chart, it just remains pretty bearish. And let me see here. I mean, we could pull out of it briefly, but I'm not so sure we will. And then my intention was looking at the weekly chart. I can see that there's a big old control bar right here, and my price target's like $90.
So you wanted to basically go downwards towards the 90s,
Right.
and then you would just wait for it to get into profit, and then what, leg out? Or
I just sell the whole thing. So essentially, when you have an equity that has that much volume on it, you don't have to leg into it. You can just go straight into the spread, set a limit price, and send it on. And the way the spread works is a critical part. I know a lot of people are kind of new with getting into debit spreads, but the way they work is you're buying, depending on direction. And in this case, it was buying a put and then selling a put against that put. They're leveraging against each other. So your sold put limits is what caps your total. If you were to make max profit on it, that caps your total profit. But in the case that we're out of the money, we don't ever have to care if it's going to make max profit. All we need is the percentage shift. So if I'm buying a $5 wide spread at 32 cents, that's out of the money. My expectation is that if it becomes a max profit situation for me, I'm not going to expect that anyway. But my goals are, I'll take anywhere from 20 to 100% profit on those typically. And if the chart's telling me to get the heck out of the way, I'll be okay with 20% or even breaking even on that. It doesn't really matter. But if it starts to accelerate this bearish trend, that 32 cents I paid for $5 wide spread can easily double. It can be 64 cents if price just moves towards it. And I like taking 100% profits on those kind of situations consistently, but we're just kind of getting back into a market that we can swing trade. So it's like I'll lower my expectations on that a little bit. I'll be happy with a 50% return. So in a sense, if it makes $16 on that spread or 16 cents on that spread, I can be happy with that and close it. The idea is I'm just taking advantage of the shift that occurs when price starts moving towards those strikes.
Gotcha.
And then the key to know on this is it is a directional trade. So you're not like buying one put and selling a call or doing anything weird like that. You're buying a put at a price that's closer to the money and selling a put that's further out of the money. So you're leveraging the sold put, the premium that you take in when you sell that put offsets the cost of the put that you bought. And that's where the difference is. If the spread is $5 wide, your risk is going to be your gains will never be wider than the $5 in the total, less the premium you paid for the position. But your risk is only going to be the premium that you paid. In this case, I paid 32 cents for a $5 wide structure. My risk is never going to exceed $32 per spread.
Understood.
All right. Might be able to get... I'm going to watch this 1 minute chart on Bitcoin here. This will either be a little bull flag and a pop-up, or this will be a breakover. It is into that angular resistance again, and I suspect it's not going to break out of that anytime soon. Yeah, this is only the second attempt on angular resistance, so... Apparently there's a lot of whales waiting with orders at like 18,500, somewhere in that neighborhood. So I'm not trying to short Bitcoin into oblivion. I'm just going to take advantage of the price movement.
There's actually evidence also to suggest that it's starting to detach from the stocks.
Yeah. I've
He
noticed
said evidence.
I've noticed that it tends to track with SPY fairly well for the past few days, but this morning I noticed it was a little bit different. So like I got two 5-minute charts side by side here. One was that's Q. Sorry, let me put SPY up next to it. So I got SPY here and I got Bitcoin here. I'm going to zoom out, get it time frame for time frame really. And there's some similarities there, but it's starting to detach a little bit for sure. Like here we have a rising channel structure. Here on SPY, not so much.
Like with the news yesterday, old Bitcoin would have been hitting 17.
Yeah.
And it's being pretty resilient.
I mean, it had a couple of quick drops that were profitable yesterday for me. We had that rollover basically. We had a nice drop and then came out of the center line and dropped again. I was able to make some pretty decent trades on that, but
I opened a triangle on American Airlines.
good show. Able to get some price action on that. Nice. Yeah, nice rejection on that big old bull bar. Tweezer top to boot with bearish engulfing on the 5-minute. All it's got to do is roll past support at 1252, and away we go.
Yeah, once the that bull flag started, it was kind of like staying at the level, so I just figured I'd open one.
There you go. Did you leg into it, or you open the whole thing?
No, I've only been able to leg in on. Once I saw like about 2 red bars, I got the put, and then once it started to kind of stay and turn green a little, I bought the call.
Very good.
So the call is losing, and I'm in the red. But I mean, if anything happens, it's gonna shoot down or up.
Right. And if it does
Goes
shoot
a couple
down,
of ways.
the gains on that put will way accelerate past the loss on the call, and overall it'll be profitable. That's the great thing about strangles, man. You really kind of mitigate so much risk when you trade those.
What are your strikes on American Airlines?
It's $13 call and a $12.50 put.
Nice. 50-cent range.
I can't remember what I paid for them.
But IMUX has got some volume coming in. SPY is going to play around for a little while.
Yeah, it's going to grind on.
We got those events coming up, so
Yeah.
I think we got a big one coming up here in a few minutes. The Atlanta Fed inflation expectations. I didn't watch SIG today, But that 10-year note auction might be something at 1 p.m. to watch.
Yeah. Anytime we have those, it's always significant. IMUX does have some nice levels.
Mm-hmm. It's got levels that, I mean, it's been moving for a couple of days, so
Got a
it
resistance.
caught me. I didn't look at it yesterday. I should have.
Resistance right at $9, and then there's a daily control bar that can take it up to about 1035.
Mm-hmm. Yeah, it's over the $5 mark now, so we're getting close to that 10.
I set my chart up to where it shows I can hover over individual candles, and it'll show me on the dope up here. It'll show me the open, close, high, and low of that candle just in digital format, so I can read it rather than sitting here having to mess with my crosshairs and figure out where those levels are.
Oh, yeah. Well, you can see it up top now.
Yep. So I can see the high there is 1048, so that control bar target could be 1048. We'd probably take profit at about 1040. Let's see here. Where's the open? Open was 1035, so we have to see it get... Wait a minute. Hold on. That was a red candle, so I got to flip this around. Open was 1035. The low was $9. The high was 1048. So if it breaks $9 resistance, that's where we're looking to trade range on that, from about $9 to 1040. And then the control bar next to it, the one we're playing with right now. Let's see, we got open of 930, close of 826. So above 825, we could trade range up to about 930. I would say that the better plan would be to trade it to 9 if you're in it, messing with it right now, from 827 on.
It's building on 824 right now. It came down to that.
1 minute 200s right there too. Very
Yeah,
cool.
sure is right on top of it. And of course, you got the 20 crossing over the 8. But that 821 is a pivot where it is, right where the 200 is right now.
Nice. That could give us a quick little scalp there. Plus, it's a descending channel down from the top at 876 there. So
Yeah. Sure is.
let me draw some lines. I like drawing lines.
You draw some lines. You draw lines all over the place. 9:55. So we got 5 minutes to this event that happens
Get my artistic
for the
abilities
Atlanta
going.
Fed business inflation expectations. And that's going to give us something. They don't have it. They don't have it in investing, so that's interesting.
Good morning, everyone.
Good
Morning.
morning, Ryan. How are you doing?
I'm great. Beggy is flying. 7-Eleven.
Yeah. Yep. Peggy is flying.
I'll throw that over here.
Peggy Sue, you're flying.
Wow.
There it is. Boy, it halted.
Next target 755 on that one.
Yep.
This is what we mean when we say look left, everybody. We zoom way out on a daily chart.
Yep.
All we do is go to these control bars in a previous trend, mark out your levels. There's your pivots. It's just points of interest. And
Yeah, you ready?
if you think about this in terms of what traders did when they developed or when they basically constructed this chart, okay? So you got some people who chased this up here. You got some bag holders, essentially, who bought. They chased price. They bought it up there at like $9. And then all of a sudden they got this gap down. Well, those guys are trapped. They're going to sit on this position forever and ever and ever. But if it ever gets back to their break even or a minimal amount of loss, they'll unload those bags. That's where the volume comes in. So when you go and look at these high and low candles and set your pivot points accordingly, you'll know where these bag holders are sitting with their orders waiting to get the heck out of this thing. And if you look at it on Bookmap throughout the day, you'll see there's a lot of limit orders just piled up at those pivots. And that's what makes it so great about being able to trade the range from one pivot to the next. You know where they're going to sell it, get out a couple cents under their order, and you made a trade. So you don't become a bag holder, you go and scalp the price action. And you're literally just riding in the wake of the market makers anyway. So
I just put a picture of Peggy in the penny stock, and you'll see that there's a hammer. It's a teal-colored hammer. right into that zone that we drew out earlier this morning when I went
Nice.
through it. Right into that zone, which was the pre-market high, basically,
Ah,
and then took off. So if you'd have got in on that,
been a heck
that'd
of a
have been
run.
that'd have been a nice almost $1 for you.
Yeah, 650 to.
You got to watch these halts, though. They have certain strategies to play after to trade after they halt it, and that thing can gap up real quick and go again and halt, or it could go up. It's going to trap traders and then slam right down.
Right.
So that's why we are cautious with those things.
And just like just like I just said with
Be
the daily
cautious.
chart, looking at where all the bag holders are, it's the same thing on a 5 minute, 1 minute chart. You'll see them, and you'll see when retail starts to chase that price. That's what makes these big bars happen. And when they get trapped, man, the market makers are right there to sell it to them.
Yeah, it was 84 cents 5 days ago, Jeremy. So that's incredible. In 5 days, like 700%.
Yeah, that's pretty impressive. And there's a I put in BTC. There is a what was I going to say? There's a formula out there. It's just math. Like if you lose 50% on a position, say you bought it $1 and it goes to 50 cents. In order to make that back, the share price has to come up 100% from 50% from 50 cents. So when you think about the percentage involved in that, these big movements to the upside are really just recapturing smaller increments back from the downside. So when you see these 600-700% moves, it's all awesome. But look at what it did on a daily chart, and you see these drop downs. When that thing traded back here at like $14, $7 was a 50% reduction in price, but it would from $7 to get back to 14, it'd have to make a 100% move. So the 50% down requires a 100% move to get back up to. So when you're seeing these, 600-700%
HPCO's
moves,
moving.
always look back to see what the actual percentage is compared to its previous high. But if you're a trader, if you're a day trader and you're taking advantage of the there it goes, right out of that channel. Nice.
Which one was that?
IMUX.
Okay, thank you.
Whenever we get these channels, man, they're just predictable as all get at. They'll always, almost systematically come down, hit the angular resistance 3 times, like knock, 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 boom, and they make a quick 50% retracement. Well, 50% on this particular channel is actually up here at about 846, but we always have a profit limit just a few cents under that. And let me throw Peggy up here.
She's halted. She's doing that thing like I said, so
Ah, yeah.
careful. Not like I said it because I've seen it a
Dude.
million times before.
Remember how you were saying set your limit order so you get the drop on that wick?
Yeah, that's what
Perfect
you got to do.
example.
If you're gonna do these penny stocks, you got to do that.
And look, I had a pivot point marked out at 755. It went just a penny shy of that sucker. And like I was just showing people on YouTube here, and everybody in the chat, this is why we set those pivot levels based on a daily chart and a 2-hour chart. Is we know exactly where those levels are. So a lot of this wick was caused by a bunch of bag holders who had their limit orders set from months ago to try to get out breaking even. That's exactly what causes those. They just get triggered.
Nice channel you got there. All right.
And that was about the limit of its move before accumulation, I would expect.
Yeah.
If it holds this level for a while, I can maybe come back
Right
to
on
this
top
and
of
trade it
angular
higher.
resistance. Yeah. I mean, it is up already $2. It's a $5 stock. It could move a little more then.
Oh yeah.
And there's your little look right there. It's going to push a little more.
And here goes IMUX coming right up to that target that we have printed out, which is a little bit under that 50% retracement. I came into the bottom of these wicks here on all
Above
this
the
action.
8, you got a little pinch between the 8 and the 20 there.
Yeah, I see that.
Building. 80TX just kind of crapped the bed. Lace is still kind of moving sideways.
Let's
Down.
see.
Moved yesterday. Must have flushed it.
Must have. And I'm going to take a quick peek at American Airlines real quick here. And then Google.
Yeah, there goes. Don't chase Peggy, though, folks, unless you
No.
really know what you're doing. I would not chase that. I'd wait.
Yep. If it breaks that 755 and
there you
starts
go.
building momentum,
IMUX.
cool. There it goes, right to our target. Now it's settling on it for support. This is...
Man, I've got all these levels marked out on IMUX that had already... It's down $10 today. No, it's down 99 cents. Sorry. Almost a dollar from where it closed.
This is what we love most about price action trading right here. This is when you cut your teeth on price action trading and you learn it in penny stocks, you're learning it the hard way, but you're going to understand it a hell of a lot better when you do. And then when you come to the point where you can literally just glance left, know where all the stinking levels are, trade between the levels, dude, it just becomes like riding a bike. It's instinctive. You just sort of do it.
Mm-hmm.
And there we are, pushing to that 50% right there, 848. Bada boom, bada bing.
I got 853. I got that 871. I got price levels up to 909 at the moment that I can see, but my hands are doing something else right now. I'll get back to it.
And we can draw lines on this all day. I got 871. Throw down the daily chart, look left. Where's the control bars? Ooh, we got some bigger ones above that. Aha. Yeah, 930.
Alrighty, let's go see that.
And then we've got
Coffee. I got 930. That's a matter of fact, that's the last one I got, Jeremy.
Nice.
930.
1043 if it goes
I
really
wonder who
nuts.
taught me how to do that.
Can't imagine. That guy's
Listen to Jeremy.
on the ball.
Uh-huh.
There's your 50%er with the wicks, man. I love these so much. These descending channels are starting to get more and more popular back in the market again. They faded away through almost the entire month of September, and it was really tricky to day trade even. But it wasn't bad. Just followed different patterns. We started getting the double bottoms that broke into bear flags that were very consistent, and we've been able to maintain profitability in this market. And it's uncanny how we can do that, and be able to just show people how to do it is what we love to do. We love to be able to show people how to do that. But what it comes down to is we know a lot of other strategies that you can also use to protect your long-term investments. Based on what we know with day trading and swing trading, we can use that chart analysis to provide enough information to be able to not only hedge against a bear market with your long-term investments, but generate income from them while they're bearish. It's incredible what you can do with options, and that's where all of this leads. When we get all the price action down, we get some of the basic spreads like we've been teaching strangles and stuff like that, and debit spreads. You get that stuff all down, and then you start learning stuff like the collar strategy. You start learning stuff like the triple income strategy, otherwise known as the wheel trade, the spinning lizard. There's a different name for it, banker strategy, whatever. You get into those, and you start to realize, like, hey, I'm kind of trading like a market maker here. I learned it from the start, and now I'm literally managing my fund the same way a hedge fund would. Being a fiduciary for your own balance, your own investments, is going to be way, way more valuable than just going and handing your money off to a fiduciary and saying, here, invest this for me and manage it, But what people should realize is the these options income strategies that you can do in your own account, these hedge fund managers are doing this with your money, and the only thing the investors really get to capitalize on is share price movement or share appreciation in their investment accounts with these hedge funds and stuff. The hedge funds are making income on that amount on your money. They're selling options. Whoa, there goes IMUX. See ya. Come on,
Dang it.
that
There it goes.
898, dude. No sooner than we
Yep.
said it.
I got 891. It wicked right into that price at 891. So Lucy is also moving again. Lucy was moving a couple of days ago, and it's back to those same levels that we had marked out previously. Peggy, who halted, is now didn't go past that, but is at angular resistance, which is basically the halt level. Let's get that halt level marked out.
My typing
Of
skills are
7-11.
horrible today.
Well, mine are getting better. Have you noticed?
I've noticed. Coffee, man.
I hope Lucian's happy with that. I've just been putting that stuff in there, man.
I'll put my hand over
Amy,
the logo on my
please.
coffee cup for the camera here. It might be offensive to some.
There goes IMAX. What's your logo?
It's from the Jay and Silent Bob movie.
I'm offended already. Just forget it. I'm offended. Ooh, I am offended. It's terrible. What is it? I don't even know what the hell it is.
This family is a house full of nerds. Let me just tell you that. Every room has its own theme.
That's
Like if
awesome.
If you walked into our living room, which we call our entertainment room, it's like, you know, we've got shelves that we made for all of our DVDs and collectibles that we put up there. It's all fandom stuff. Like, you know, there's like Jay and Silent Bob stuff. There's comic book stuff. There's, you know, all the different fandoms that we have in this household, and it just reflects our personality, really. But like my wife and I made these shelves, more her than me, where we did like basically a collage of different comic book prints that we put on the surface, and then we covered it with clear epoxy, and then treated it so it was just really cool. It looks like a nice thick laminate over it, and it just all the shelves look like that. And then there's like all the different movie collections and video game collections and all this stuff. And really neat. But every room has a theme, and then this room here, I mean, if you don't recognize the crest on the throw pillows there on the couch behind me, that's from Game of Thrones. There's some dragon eggs on the shelf over here. I mean, this is our Game of Thrones themed room. There's a map of Westeros on the wall. So we're nerds. We love it. But
Nerds. Peggy Sue.
so Lucy,
Peggy might be doing another halt here soon. Watch her.
Lucy's a fairly new IPO.
Yeah.
We're looking at an ultimate price target of like 360 eventually, but it's got
We're
some
in
levels.
that 15-minute range on SPY, by the way.
Yeah.
Yeah, it's got some levels. Lucy's got some levels. I got levels up to like 483. It actually hit those levels like 297, 395. It hit all those levels a couple of days ago.
I just
And
realized
it's coming back to them again.
I got 2 SPY 5-minute charts on my grid here.
That happens sometimes, you know.
Yeah.
SPY coming down to the median of the middle of the opening 15-minute range.
Yep. And yesterday's close is that bright orange line I got right there.
Hey, go look at your line. Mr. Jeremy.
There was a Head and Shoulders on American Airlines, but it looks like it's really respecting that neckline right there.
Oh yeah, it's holding it.
Watch that Peggy now. Careful on her.
And this is something else we can show you guys.
LASE is slow grinder. Lucy's gonna.
I've called this
flush
out
a little
before,
bit.
but like even on a 10-second chart, you can find control bars. They are always significant, and it's just a matter. I've heard them called different things like mother bars, you know, your range bars, whatever you want to call them. But if you just literally draw a pivot on those things, it sets your support resistance level in the minute. There's a 1-minute chart, And this is your key level, so always make those stand out a little bit. What looks like a bull flag isn't always a bull flag. Oftentimes, if it breaks that support level and then gets through the next moving average, which happens to be the 200 below, we could start trending. So a lot of people love to trade bull flags on the breakout. Cool. This is why we say trade the break and not the setup, because if you see this as a bull flag and you just jump in and throw a bunch of money at it and it just takes a big dive right through that pivot, yeah, you're screwed. But if you trade the breakout on the upside, like for example, we had this little accumulation here was a miniature bull flag. If you looked at this on a smaller scale chart, like a 10-second chart, I can't show it here, but if you looked at this on a 10-second chart, this would be a bull flag, and that was the break. So the breakout is getting in once it breaks out of resistance of that bull flag itself. So if you just were to put a pivot right there at $8.46 here on IMUX, for example, there's your breakout. As soon as that breakout candle formed, get long, ride it, run it till it runs out of momentum, and kill it that quick. You're in, you're out with market orders instantly. I mean, it's 1 minute candle, one minute candle.
I hate to bring it back to strangles again because it's what I'm working on. I'm sorry.
Not at all.
Joking me. It's joking me. It's joking. I'm just kidding. I'm kidding.
The Angel wrote a pretty good article about doing strangle. She only does strangles off of bull or bear flags.
Mm-hmm. You can use the bull flag or bear flag itself as a tool to leg into those strangles, so you have a net positive position from the get-go. And as we're trading weeklies on these, and we're never more than a little more than a week out. So like you'd be trading, the 14th is, we're done with that week. We're going to the next week. 21st expiration, and you're using the leverage that you can gain in these little movements on that flag itself, to where you open the call side at the bottom, open the put side at the top. It builds sort of a cushion of cash between the two strikes, so that it helps offset some of that time decay, and also the implied volatility fade that you incur through the middle of the day. So it just kind of gives you a net positive position, to where if this thing goes gunny bags and opens up sideways tomorrow, you can probably still close it for a net profit and then leg back into it later. That's the whole process of trading strangles. And where you go next is you eventually learn how to leg those strangles into condors. And you can take and have entered on the break. So like, let's say you went and bought the call right here on the break for the pivot here, and then you went and bought the put here. You could then go and sell a cash or a covered put one strike below your long put for probably close to the same price you paid for the long put. And then again, you can go back up here with the call side, sell a call one strike above your long call side of the trade, and lock that into a condor, and that eliminates time decay for the most part. And later on, during the same day, if it just ranges sideways, you can leg in and out of those short legs over and over again to generate income based on your long position without ever losing your long position. And if it runs through one side, you can certainly take profit on one leg and ride it like a debit spread towards the other side, because it's built like a debit spread. But if you get enough range, you can actually build it like a debit spread, but have it as if it's a credit spread. I've had occasions where I've had price action go with enough range where I could go and get my long positions and then sell the short legs for more than I paid for the long legs, and then it acts like a credit spread, but it's built like a debit spread. When you start to get that knowledge together, where you start building those, that's when things really get exciting, because then all of a sudden you're trading risk free and you don't care what the price does. You can profit on either way. It can make a big move the next day, and you can leg back out of the short positions and ride your long position to whatever direction it's going. And there's a million ways to skin the cat once you've built that. So later on, when you guys get to advanced levels, that's where we go with this, and it's just building that knowledge a block at a time. You go to the basics. You go from simply swing trading, day trading, long options, one way or another, to building these strangles, and then you go into building condors. You can build iron condor, you can build butterflies from this. I mean, there's just so many different ways you can trade options to utilize the amount of leverage you have in them, and then leverage them against themselves or against other options. It's just opens so many doors for your trading style. And it can be complex. It can be hard to get, hard to understand, hard to learn. But once you do, it's just like the light comes on, and all of a sudden, just as the same way as learning price action, you do it instinctively. Eventually, these complex option strategies become instinct. You just do them. It's like riding a bike.
And that's where we're heading. The price action, I know it's a lot to learn, a lot to digest, but the price action is key to everything in trading those options, and knowing the sentiment and how it's going to go. Learning the candlestick patterns is great because they play out on the daytime or the daily as well, and you can you can look at your daily charts, and you can find the trends, and you can find the areas where prices pulling back, or where you can see where, okay, price looks like it's going to go here. It really opens up your everything, all your trading.
Right.
And this is one style. Price action is the way we do it, is one style. Sig's totally different. He does it a total different way. But I always said, when Scott was with us as well, Sig, Scott, and Jeremy would all use different methods, but and strategies, but they would all reach the same sum. They would all come to the same point. They'd reach the same destination, and it's like, wow. And so it's just a matter of finding the one that fits your personality best.
Someone was saying my charts are blurry on YouTube. Sorry about that. I had to mess with my settings a little bit this morning. I'll put them back next time I broadcast, but I can't change them mid-broadcast. Sorry.
That's tough.
I'll make it better.
We're playing around on the open.
Yeah.
Right now at SPY. Want to see it
There's a
do some things. HPCO was moving. It's kind of faking out a little bit now.
We had a 1 minute Busby on Q here. It fell below its support line and bounced back with a tweezer bottom and set up a second evening star pattern. This is interesting. That just nullifies everything. It sets it in a tight range. And watch the Bollinger Bands pinch really tight here, and then we'll get a breakout. That's coming.
What are you looking at to switch over to each equity?
As far as like setting them up,
like do you have a watch list you have, and you're like, oh, Q's doing something, I see the spark chart, or
I just glanced over at my grid here. I got a 1 minute right in my grid here on the top left, and then I got a 5 minute SPY, and they kind of track each other really, but I was looking.
Oh, you have them on other screens, and you see them, and then you bring it over.
Right. So like the grid I'm sharing in the stream here. Are you watching it?
Yes. I was just wondering what makes you switch, because I'm having trouble like figuring out what stocks to trade and stuff like that.
Gotcha. I do have a watch list. I kind of keep a built list of stuff that I normally would trade. So I do have that, but it's like I can't watch them all the time. But what I can do is I can set a few of them on a grid, and when I'm watching indexes like this, I can kind of know what the rest of the market is likely to do with that, and then I can go and flip between different stocks. And then Stone was mentioning IMUX this morning, and Peggy was mentioned earlier. I can just flip those open on my grid. Just a quick
go look at Lucy right now.
Click on the ticker and type it in. Yeah, it's sometimes tricky to find what stock. Oh man, IMUX is just collapsing. Ouch. That is when a bull flag fails right there, and that's why we do not trade the setup. We wait for the break. Looking at Lucy though, zoom out a little bit on that. It's starting to resemble a bit of a head and shoulders there, bud.
Yeah, it was just pushing. It was a push that I saw in the 1 minute.
There it goes. Bam. We're coming back to the neckline here.
Which time frame are you looking at?
1 minute. I got a left shoulder, I got a head and a right shoulder and a break right now.
Wait a minute. Hang on a second. Let me come see what you're looking at because show me Lucy.
Right here, top
Oh,
right.
I'm sorry. LASE. Lace.
Oh, LAC. Okay,
I apologize.
no worries. Ah, yeah, that's moving. No head and shoulders there, buddy. Nice.
Guys, is there
Yeah.
is there a good time for me to start looking to get into a profit loss bracket on any particular penny stock out there that you could suggest? Sorry, I've been away from my desk. I've had to do something.
Okay.
You don't like pineapple or whatever it was, Peggy, do you?
Peggy. I got distracted. Hang on.
That's all right.
Is it not that I don't like Peggy? Alrighty then. I have to go look.
Okay. Yeah.
There's some moving things right now, and the thing with some of these penny stocks, Victoria, is they move so fast that it can be, by the time like yesterday, I was trying to put something out, and by the time I put it out, it happened. The move had already happened. But I'm looking at LASE right now, and if you were just gonna, I'd wait for a pullback on it. Really, I'm looking at a 1 minute chart. LASE is the ticker.
That looks really volatile, mine.
It is volatile, and it looks like it's going to push again. And it's got some levels that it hit a couple of days ago. Actually, it was yesterday, and they had a contract from the Navy. It doesn't mean that it's, going to make this thing skyrocket, but it could. And there are levels it's at 296 right now. It's going to hit that. If it hits that $3 mark, we're going to look to see it for a pullback. Man, it's quick. That's an enticing little son of a gun, is what it is. It's trying to lure everybody in. Yeah, look at the daily on it.
Okay. If I could break this down.
Dang it! You see, not hit that $3. It's got room, and it's a recent IPO.
Just look at the middle of that big red bar from its IPO. Let's see here. We got
Like 372.
open at 5, close at 258. So where's the halfway between that?
Yeah.
When you look at lays on,
Probably about
What time
375.
frame? I'm looking at it right now on a 1 minute. It just broke that 304. It broke that $3 mark. So I'm looking for it to pull back and get, if I were going to take a trade, I might think about getting in on that pullback. It just hit that 290 something mark. I'd wait a minute, see what happens here, how far it's going to come back.
It's
Usually when they hit a whole dollar mark, when a penny stock hits a whole dollar mark like that, it usually pulls back a little bit. Sometimes this guy's volatile. He's got a lot of volume for today. I mean, it's 90-something thousand, 100,000 on this one candle.
It can accumulate and punch about 370 today is possible, but
yeah, you could do man. I wonder if it's going to come back any further now. Let's see what this next candle does.
hey, we got a little descending megaphone here.
American is getting ready to do something. It's consolidating.
It's hard for me to say right now, Victoria.
yes, okay, don't worry.
I don't want to screw you up, and
That's okay. If it's just a good chart for me to practice drawing lines on, just to see if I can set myself up for tomorrow.
sure, that would be a good one just to practice on. It looks like it might pull back pretty far here.
Okay.
Yeah, American Airlines is definitely setting up a nice looking bull flag, isn't it? We got a pivot here that we're moving to on Q, right to about 263.50, and it's already breaking it before I could even print a line on there. Little descending megaphone pattern popping up. Next level control bar right up here. Oh, about 263.85.
See, Peggy.
If you traded this on
Or
the
lace,
bull side
lace,
right
lace,
here, that's
lace,
where you take your profit right there. Quick day trade
LASE.
setup.
Coming up 10:30. Who's speaking? Is anybody speaking?
Let's throw Google
No,
back up
they've
here.
already done their stuff.
Google might flag here a little bit, so I might just wait and see if we get back to a low here where I can go and take profit on that spread a little more than I'd like.
If
A
that
little more without
LASE comes in back to 292, which is the basically the 8, then you could possibly get in there, wherever the 8 is, 293 now, but it looks like it might push already. Let's see.
So we're waiting for it to hit the 8-minute line, isn't it?
That's what you could do, and you could set a limit order to hit that line, which is the 8 moving average, like 293. You could put in a buy order there if you were going to do that for one share to test. And then go ahead.
Do you love that on QQQ like I just said? I drew the lines on the control bars from a 1-minute chart and had a price target nailed to the penny.
Oh, it nailed it like that. Yeah. So you could do that at that green, and then take an entry, and then put your stop loss down to, let's see, that's 293. I mean, really, you could put your stop loss all the way down to the 15, which is like 285. So it's not even a full 10 cents. And then you would risk that on a share like that. But if it doesn't come back to that line, and it looks like it's going to continue to go, then you might want to try to get in a little bit on one of those red candle-ish areas. But then still set your stop loss all the way down to the 15, because that's still a good place for a stop loss. And then you can set your take profit at 311 for it's going to be a short gain, and it's not going to be necessarily a 3-to-1 or a 4-to-1. These penny stocks move so fast, Jeremy. I don't know how you do it, but you got to get in there and get out.
Yep.
Yeah, but effectively, what I could do is set this up now.
Right.
My entry order starting point in, put my stop loss in, put my close up profit in, hit review and send, and leave it for the day, because that's it. The trade is taken.
You could leave it for the day. Yes, you could do that. That's not something I'd necessarily like to do, but you can.
What happens if it doesn't close at profit or stop loss and stay somewhere in between? Can I just leave it go overnight? Not a good idea.
No, never hold the penny stock overnight.
No.
Yeah, exactly. So what?
Never hold the penny stock overnight. You would just close it out wherever it was.
Right. So, yeah. So basically, at the end of the day, come back and see what this is. Yeah.
Yeah. If it doesn't hit it, you could do that.
Right. Okay. Well,
not highly recommend it with penny stocks, but if you're just trading one share and you're learning, then go for it.
Yeah, I am. I'm just putting one share in, so this is going to cost me, hold on, about $3. Oh, it's going to cost me $3 with 1 cent fee and no commission. So I just want to put this on just to see what happens, really, and follow it. Is that all right?
Absolutely.
I hold you not responsible for any potential losses that I make.
It's going to be a learning experience, anyways. I mean,
yeah, exactly. But I just want to learn how to set this up so I can get into it tomorrow. So there we go. I've sent it. It's in my working orders thing, and
there you go. Or at the very least, I mean, don't throw a big size at it. Throw 1 or 2 shares is fine. Something like that.
Yeah, 1 share's fine. Just to practice.
Yep.
That's
$3
the beauty.
is hardly going to kill me, is it? So
no, but you're not going to lose all that $3, though, are you?
And
you're only going to lose pennies if you lose.
Yeah, exactly. And then potentially make a couple of bucks if I go up. But I just want to learn TakeWorks platform how to do it.
Sure, absolutely.
Like I did with options, only on a cheaper scale. And
much cheaper.
Yeah, much cheaper, and with the intent of learning price actions, not thinking I know it all like I did last time. So yeah.
There you go.
No, I always,
that's a good way to analyze it. No, don't
That is a
knock that
great way to analyze.
because that's it.
Yeah, but
You got to
I'm not
realize.
knocking it at all.
You got to
it's an
tell
iterative
yourself,
learning
I know
process, isn't
nothing.
it?
You know.
Right,
It's
it
an
is a
iterative
process.
learning process, and I
Yes.
knew I was going to come in and not be an options trader straight away, but I just wanted to learn how to use Tastyworks and set things up, and I'm back to doing that again now. So thank you.
You're very welcome.
Nice. So I was just pointing out on QQQ here, this stuff we learned trading price action on penny stocks, it plays right into large caps, right into indexes like magic. But it's like you get cleaner price action on the large caps. That's the difference. And if you learn
Yes.
penny stock price action, and I say that's learning the hard way, it sets you up for being able to have a much easier time spotting and plotting all your price action on a large cap chart. And here it just proved itself perfectly with QQQ here. Descending megaphone, easy breakout trade, right to that target, bam, with a wick. All right, now we're back there. So we set up an accumulation. Here's that 8 period doing its thing. I love the 8 period, by the way. Hammer, doji, boom, big push, right back to that price target. Like, just, I mean, you could do this in your sleep at the right time when you get it. Everything comes together. It's really that easy. Your subconscious mind, your lizard brain could do this. And that's the whole
It's
point.
the 8. Sorry, Jeremy. Is the 8 simple or exponential?
Simple. Yeah, just a basic, simple moving average.
It's a simple. I use the EMA. They're
Yeah.
pretty
Yeah, I
much at
noticed
that
Stone
point
is
the same.
using the
EMA.
EMA 8 and 15. That's why I was asking.
I
Right.
just run the SMA.
Yeah.
The way I do it is because I use Bollinger Bands on my charts. The Bollinger Bands, the center band is a 20 period simple moving average. So instead of throwing an exponential and a simple together, I just keep them both simple. So I just run the 8 period on a simple moving average. Look at that, dude. Nailed that price target. Now comes the pullback.
Just got knocked out of it, didn't you?
I sure did.
Yeah, because you listened to what I was saying.
Right.
Okay, that's
Well,
okay.
that's okay. Now look, that's okay. You did that. Now you only did one share, so you could technically get back in.
Right.
How do I get back in then?
Oh, you have to wait and see.
Oh,
That's
right.
what we're looking for. You see it popped up on us, and that could have been a nice little trap. It's getting back into those levels from
Nice
yesterday, and almost looks like an M top forming. So we just kind of see it hit that high, and then it just kind of went sideways, dropped down on us. But we're still technically a little bullish on the look, and we're still technically trending upward, but we have to wait and see. So I wouldn't get right back in it. I'd wait and see if it gives us a setup.
Yeah, so when you say right back in it, right, obviously now that has closed out the entire bracket, not just part of it. Is that correct?
Should have, yes. You want to make sure it did.
All right, here's your
Okay.
bearish play on this. QQQ, tweezer top, right at our price target, coming down. Next price target, 2 zones. We've got yesterday's close as target 1, and extension would be back to that angular resistance from that previous descending megaphone pattern. Easy peasy.
I'm out of here.
You're on cue.
See you, man.
You're on cue today.
I'm on cue today. So I hate to interrupt. You and Victoria were going.
No,
back
that's okay. Go ahead.
forth on just to interject a moment. This DRV, I mentioned this yesterday, and I was talking about it, and I wish I would have put it in words and put it in our alert channel because it was a great trade. So this is a triple leveraged bearish ETF on the real estate market. Okay, it says it right there. Trixarian daily, whatever. So you look at the trend on this thing, bullish. Coming out of a rather nice, if you zoom way out, actually weekly chart will show it better. These leverage ETFs, they're expensive to operate, so they do tend to fade over time. They will not be a long-term investment vehicle, but they're great for trading. They always decay over time, though. I mean, you look at the trend on the weekly, it's always been long-term bearish. So don't by any means hold these for a long time. However, since the rates are up, the housing market's kind of pulling back here, this is going to be bullish for a little while. And that nice rounding bottom reversal with range expansion on a megaphone pattern, the same way we just saw this on a 1-minute chart for Q. That was what I saw that I realized this was a good bull trade. And I was a little bit late to the party, looking at the 2-hour chart. I was watching for a pullback, and this is here where we had it tap off the 200 period. Nice trend. This is the pullback I looked for first, looking at this as a measured move. Here's your half measured move. So we always get the full measured move length. Typically we'll get a half measured move with another pullback. And yesterday I got long on this thing, right down at around 74.70. And I'm not trading options on this. This is just an equity trade. So pretty easy overnight hold. I know it's coming up back up to price targets above, and it just goes to show that you can swing trade with the knowledge you develop day trading price action. It's all the same on damn near every time frame. You just got to know what to look for, and that's the whole point of making this instinctive by practicing these 1 minute and 5 minute trades, because you'll get to know that price action so well that you'll see it everywhere. You can't miss it. It just becomes common, instinctual knowledge. It's like riding a bike. You just see it. You know what to do. So anyway, we had that volatility into the close yesterday. I was still pretty confident. I had my stop loss set just a little bit below yesterday's low, and it didn't kick it in the pre-market. Thankfully, I had my stop loss down to like 73.15, so it was perfect. But it did hit it, but it didn't catch my order in the pre-market. I'm okay with that. It hit 73.14 and it didn't fill. Just lucky on that one, I guess. But the overnight on that was pretty nice. And now I'm looking for continuation if I want to keep holding this trade on. And the thing with these leveraged ETFs, you don't hold them longer than you have to. They're a trading vehicle. They're not an investing vehicle unless you're shorting them. But watching these things, really great price action opportunities. We had that nice megaphone pattern opened up. Pretty nice entries provided. Descending megaphones we know like to break bullish, and essentially we're looking for this. And this is our previous trend, okay? Comparatively, yesterday's price action. This is a 1 minute chart. This is a 5 minute chart. And I can zoom out on this and see very good similarities here. We had the descending megaphone. We had that test of support. It broke out. I don't expect it to get back to the previous high. I expect it to reject somewhere. And here's where it happened. That evening star, I was able to get out just on the top of this candle right here. I sold for 79.38. Bam. Done deal. I'll get back into it later if it continues to trend up, but I've already made my profit overnight. Anyway, I just thought I'd go over that. And like I said, I meant to put this in the alert channel as just an equity trade. The options on it suck. The bid ask is too wide. It's really not worth trading spreads or anything like that on, but it's a great equity trade.
There are a lot of puts on SPY. Yes.
I'm in this trade now, right? But it's just what's happened is it's filled the buying order and it hasn't filled either of the stop or the profit order yet.
You should be able to set those.
Yeah, I've set them and they're working. But they haven't been filled and they're not going to get filled until one of them gets hit. That's correct, yeah?
Oh, correct. Right. It
Yeah.
won't get filled until they get hit. Correct.
Yeah, so it doesn't get filled on the buy until it hits that price.
I'm going to share one
Right.
more nugget on YouTube, and then I'm going to sign off.
Okay, cheers, Tom, thanks.
This is pretty cool. We love seeing these. It's a rough one. So I guess you could call
Got
it a
hit
diamond.
again, didn't you?
Yeah, I did, yeah. No, that makes sense now. No, I understand it. Thank you.
You're welcome. Well, this one's being tricky right now. So
No, it's not. It makes perfect sense.
it's it did hit that $3 mark, and it did pull back a lot into that 280-ish area. So I'm still watching it to see what it might do.
Diamonds. I see a diamond, guys.
On SPY? Oh,
Yeah, SPY
I
5
do.
minutes. It's a rough one.
5. It is a rough one.
That
I
don't
see
mean
it
it ain't.
though.
So when we set these diamonds up, if you guys have been paying attention to our former
Flush it out.
broadcasts, yeah, look out because they do some fun stuff. I'm actually going to angle that a little bit in here. So change that up a little bit. When I see these diamonds, I always extend the trend lines on them. And what it is you get range expansion. It reaches a certain width of range, and then it contracts. And what you look for is a breakout. And typically a diamond will literally look like it's going to break out one way and then about face and rip the other way. And all you do is you know where the height was. Let's see here, and then just mark a straight line out. Oh, what about 359, 42, 43? Somewhere in that neighborhood is fine. You don't have to be perfect. Mark out the high, mark out the low. And what you'll typically see is you'll see the angular resistance or support broken briefly. It'll run to the height or the depth of the diamond's widest point. And that's where you look for your reversal to get in on a trade. And if you start noticing that you have like a tweezer bottom down here or a tweezer top up here or whatever, you'll know which direction to trade. You just go in the opposite direction. And they're very typical, very easy trades. And then I always extend the lines on them because sometimes they'll carry on for days. It'll follow a trend or whatever. Not even just days, sometimes just minutes. But either way, you tend to build a trend on them. And all you do is, like I said, just extend your lines. Don't take the whole thing away. That was dumb. All right, I'm glad I'm doing this on my bigger monitor because I remember when I was doing this on my 22, I always had that problem. I dragged the whole line because I couldn't quite click exactly in the center of the circle for that, but there it is. All right, so keep an eye on the diamond. You'll know what to do when you see it. It'll give you a sign of what direction you should be trading. And sometimes they'll just break. So when you get a diamond that continues, it'll push past that height or that low or that height. And essentially it'll just start trending. So when you do see that break, you can know that this was just an accumulation zone. And then you look left and figure out if it was a measured move or not. And in this case, it's just chop and more chop and more chop. But look what else we see. Do you see it yet?
Ooh.
It's part of a bigger diamond.
Oh, it is. It's a part of that. Oh.
So we could take our other trend lines.
Yeah, that one there, huh?
Yep.
From yesterday.
And it opened right on top of that wolf wave. That's where that purple line comes from. And then I'm going to take another line and draw it on there because I like making my chart as nasty and unreadable as possible. All these lines make sense to me. They don't have to make sense to you. I'm trading.
Chart nasty.
That's right.
Nasty.
That is my tag right there, baby. I'm going to start switching to that. I'm going to go change my name from just Scalp It to Chart Nasty. A throwback to Vicky Barbalak. Met her. She's awesome.
Is that Descending Channel?
Trailer Nasty.
On, LASE.
I do Chart Nasty. But check this out. Accumulation, diamond pattern. If it breaks and trends, we got a measured move behind it. See? Bearish, measured move. Setting up. So we could be really bloody bears today, after all. And looks like probably 355.50 is going to be our critical pivot, thereabout. And if we crack that, we'll start trending into a measured move. And dude, that's pretty sizable. So
there's a lot of unusual options coming through.
Yeah.
On the bot that I somehow or another I set it up to where I get notifications. And we have a lot of puts on specs, SPX.
Mm-hmm.
And, well, I mean, a lot of them are for 3,300.
Didn't we see, we saw some data yesterday coming through where we got those unusual options, and we figured out that it was literally looking like hedge funds were building another collar. And that's what it looked like. And if you study that collar strategy, if you're on YouTube with us, go check out our website, or better yet, in the next week or two, we're going to have it so our blog has a built-in search tool so you can search for articles in our blog section. For now, just search for them on the YouTube channel, or on, not the YouTube channel, on Google. You can just Google search the subject of the article and then put, space bullish bears on it. It'll pop it up. But check out the article that I wrote about the collar strategy. And once you figure out what a collar strategy is and how all the moving parts work, and then you go and look at these unusual options orders, and you'll see it. It's kind of neat. It'll make sense to you. Because right now, like I was saying, you got all the flapping heads out there, trying to say that this is the bottom, buy this dip, this and that. And you look at the chart on a daily and you're like, how the hell is this a bullish reversal? There's no reversal here. It's just trending. It's been bearish forever. Come on now. Can't lie to me. But look at these relief rallies. It's exactly what they are. They come out, they flap their head and say, this is the bottom, buy this. This is a great time to invest. And sure enough, it just provides liquidity for the institutions to just sell it to you. And, well, we see the gap downs. We see the bearish volume is much bigger than the bullish volume overall. It happens over and over and over again. But when that liquidity goes away, when no matter what they come out and say to try and pump the market, doesn't work, they don't get the liquidity they need to unwind their massive positions. Just remember, these people are combined. They control the market. Period. There's none higher, but they're all together. They all do this together, and they all call each other. They all talk to each other. They all know each other.
Yep.
If you're a retail trader and you're just riding in the wake of that, you got to know what you're seeing. And when you start to see that volume fall off, where the volume bars get smaller and smaller and smaller, that means liquidity is going away. So if these guys are trying to unwind long-term bullish positions and start to go into bearish positions, and there's no share exchange providing that liquidity, what are they going to turn to? Options. So they're going to go in and start building these derivative positions to hedge their positions that they do have on for long, and they'll build collars. They'll still try to trade the income strategies as well, but the collar strategy can also be an income strategy. And if you read that article I wrote, I explain how. So definitely check that article out. And it's got a little picture of some dude with like 20 different shirts on with the collar sticking out. He's got sunglasses. You'll recognize the thumbnail when you see it. Read that article and you'll understand how this market's working. Once the liquidity goes away, those collars start to come out and you'll recognize it. It'll come to you. All right, guys. Well, I'm going to sign off the YouTube channel and then take a quick break and come back and finish up the day in our Discord channel. And we'll see you guys later on YouTube. Be sure to like and subscribe and hit that bell so you get the announcement whenever we come out with something new. We're always dropping knowledge and videos and watch list builds. We're always doing SPY analysis and crypto analysis. We're always putting content out, and we always try to do it as much as we can. And the more following we get on YouTube, the more we'll do it. So, like, you support our channel, we'll support you. So tell your friends, tell your friends and family, hey, check us out. If they're into trading, check us out on YouTube and just follow what we do. We'll show you some really cool stuff. Anyway, we'll see you guys later. And like I said, I'm going to take a quick break and then come back into the Discord channel where we can work one-on-one and start building some knowledge together as a group. See you guys later.